The Federal Reserve, or Fed, is the central bank of the United States. In simple terms, picture the U.S. economy like a bustling market. Imagine the Federal Reserve, the Fed, as the wise market master, keeping things running smoothly, ensuring everyone gets a fair deal, and preventing the whole market from collapsing. Additionally, the Fed acts like a friendly loan officer, making borrowing costs reasonable and fair, so you're not stuck paying through the nose just for some help. That's what they did recently by hiking interest rates. In fact, the Fed has just raised interest rates for the 7th time last year. Over the past couple of years, these interest rates. Think of interest rates like the cost of renting a grocery cart. The cost of carts increases as the Fed raises them, creating a situation where they become more upscale. By augmenting the federal funds duty rate, the federal bank intends to elevate the overall expense associated with loaning in the economy. To understand the impact, here's an illustration. Imagine a family searching for a $300,000 home mortgage with a 30-year fixed rate. Initially, banks offer them an interest rate of 3.5%. In this scenario, the total cost of the mortgage over its lifetime, including interest charges, would be around $485,000. Their monthly payment would be approximately rises to 4.5%. In this case, over the 30 years, the family would end up paying more than $547,000 for the mortgage, with interest outlay accounting for $247,000. Consequently, their monthly mortgage payment would surge to roughly $1,520. With higher monthly payments, some people might hold off on shopping when the Fed increases the rates. But lately, the temperature gauge is about to drop a bit. According to recent forecasts by the Federal Reserve, it has expressed the possibility of reducing incentive rates if inflation continues to decline in the coming year. Most policymakers anticipate a reduction in the key interest rate in 2024. UBS predicts a 2024 U.S. economic recession, expecting the Federal Reserve, Fed, to effectively combat it by fundamentally cutting incentive tariffs between 2.5% to 2.75%. Fed officials projected. After watching this video, did your brain grow a third tentacle for absorbing knowledge? Give it a thumbs up, like, share, and subscribe to this channel to join the Intellectual Fan Club. And that's just the tip of the iceberg. Watch the next video for more vitalizing content.